Hi guys, welcome back to my channel and welcome if you're new here. Today I'm going to be talking a bit about my choices with investing and like where I'm at now after what feels like a century of investing. I kind of wanted to talk about my decisions with my Vanguard stocks and shares ISA and why I decided to switch out from the Lifestrategy 100. I just thought it'd be kind of interesting to talk about, especially because as an investor we grow over time and you don't know how much you've grown until like you're looking back and remembering where you started and how much you've learned and just how little you knew in the beginning, or maybe not how little you knew but how narrow your view is. And I feel like that's the way it should be, you know, there's nothing wrong with that. I honestly believe that you should focus on one thing at a time and learn each thing to get better, so then you have like a really great perspective on what you're doing and you have a great knowledge of it, so then when you move on you're okay to move on and start something new and to learn more about that, and then that's the only way to grow. I'll tell you a little bit about where I started. I guess I started maybe November 2019. Like in 2019 I think I started investing for the first time. I can't remember what happened and what made me think that I should start investing. I don't even know how I even came across it. I actually didn't know a lot about investing when I started investing. I didn't even know it was really a thing. I remember my dad maybe had bonds or something, but he would get a little bit of money from like a company every once in a while, and I was like, huh, that's interesting, what's that? But he never told me what that was about, and I still don't know to this day. I should probably ask him. And I remember, I think he once asked me if I wanted him to buy me shares or something in something, and I didn't know what that meant. So I was just like, oh, I don't know. I'm pretty sure I remember that. I have like really kind of flimsy memories about what my thoughts on investing were growing up, and I didn't know anything about it. No one taught me about it. They didn't teach you about it at school. Like, I don't think we ever touched on it in school whatsoever, not even like introductory. And in the UK, I don't know where you are, but in the UK when you go to university you have the classes you chose and that's it. So like whatever course you're studying, that's all you do. And maybe you can have a mixture of another class. I think like in your third year for your thesis, what is that called in English? Dissertation. I have an international brain. It's hard to remember like English words, like British words for things sometimes. I digress. You're just like on this kind of like narrow path, and so I never learned anything about investing growing up. I never learned about it in school. And then fast forward to 2019, I don't even know what sparked me to want to start investing. I don't know what it was. I must have seen one video on YouTube and been like, what is this? What is this? How do I do this? So I'm one of those people who I get really obsessed when I learn about something new and I think that it's something vital to my life. I instantly will just switch up my life and do whatever it takes to add this new thing into my life. It's just the way I am. I'm all in. I get very obsessive when I have hobbies. So yeah, I decided to start investing. So I started looking up the best ways to start investing, beginner investing, and the thing that kept popping up constantly was Vanguard. So Vanguard, this is what I kept seeing, and I was like, oh, Vanguard, that's where I need to be. So I opened an account with Vanguard. I watched, I think it was Mama Fefe, she did a video on this. I know someone's asked me to make a video on opening up an investment ISA or a stocks and shares ISA, and I did say there are lots of great videos out there. I literally remember commenting back saying there's lots of great videos out there. I don't think I have anything new to add. If you would like to see that video, let me know in the comments below and I'll make one. I can link Mama Fefe's video down below because that's the one I use to get started. She does a great job. She makes amazing videos. I watched her video on how to get started and I was like, okay, great, I'm gonna do this. So I literally just opened the ISA. I didn't even really think about it much. I was just like, I have to start, because if I don't like follow momentum, I will generally just kind of forget about it and teeter off, and that's the worst thing for me. And I knew that, but I knew this was so important that I had to start now. So I opened the investment ISA. It was super easy to open, but when you open it, you have to choose an option of either £500 deposited or set up a monthly direct debit. And I was like, I don't want to put a lump sum of 500 into this. I don't know what I'm even really doing exactly, you know, because I'm such a beginner. And I'd watched a lot of videos at this point, so I knew the basics. So I decided to go with a £100 direct debit. And you had to pick a fund to start with. So I was like, I don't even really know much, but I do know about this Lifestrategy 100. My first I talked about it, other people have talked about it, I've watched lots of videos on it. This will be a great starter point for me. So until I figure out what I want to do long term, I will invest in the Lifestrategy 100. So I did that, and we invested in the Lifestrategy 100 for a year. So we were investing in there, and I set up a monthly direct debit, and yeah, it just came out of my account, and that was what we were doing. I told my husband about it. I was like, this is a thing, and this is something I think we should be thinking about. And he was like, okay. He was like, you're the money brain here, so I trust you. And yeah, I used to like do like charts, and he never looked at the spreadsheets. So I just stopped adding into those spreadsheets. So that's how I started. I started with the Lifestrategy 100, and then it got to the point where I'd done so much research on portfolio setups and just in general long-term investing and the strategies that have worked for people. So I started looking more into that, and then something that kept coming up often was having a global fund or a global tracker. And the Lifestrategy 100 is great. I have nothing bad to say about it. I did, like, in the time that we were invested in it, like, it did really well. The only time it ever went really down drastically was during everything that happened, obviously, because the whole stock market went down. And the Lifestrategy 100 is an almost global tracker. It's actually a collection of different funds, like ETFs, index funds, in one. It's a collection of funds, basically. So it's a collection of funds in one place. It's the Vanguard FTSE UK All Share Index, the Vanguard US Equity, the Vanguard FTSE Developed World, S&P 500, Emerging Markets, FTSE Developed Europe, FTSE 100, UCITS ETF, Japan Stock Index, Pacific X Japan Stock Index, and the FTSE 250. So it's 100% equities, and it is invested in all those funds. But as time progressed, I realized I wanted to have a global fund, and although the Lifestrategy is technically super diverse, has a global exposure, the weighting of the Lifestrategy 100, it's not weighted the way the global market is weighted. It has a UK bias, and that means that it's more invested in the UK than the UK makes up in the stock market. So even though it has a global reach and quite a global diversification, the weight of the UK is higher than the UK's actual weight in the stock market globally. So that gives it a UK bias, and that makes it slightly unweighted in the sense of when we're talking like having a global tracker. So then I was like looking at what the alternatives were, because the idea is that if you're investing heavily in something that has a bias that is against what is actually happening in the stock market, is that that economy is going to thrive. For me, in the long term, normally I would have been like, do you know what, it's fine, because I live in the UK and it doesn't really matter if I have a UK bias. I don't think the UK market is going to drastically go down over time. I do believe in the UK. However, the issue was I actually don't know if I will permanently live in the UK. I'm about 80% sure that I won't. I know we will come back to the UK for sure, but in the like long term future, I'm probably not going to retire here. That's just a fact of it. My husband is Canadian, so there's a likelihood that we are going to retire in Canada. That was a plan for a long time. We're probably going to live in BC or somewhere in Canada, or maybe somewhere else globally. We've talked about Asia and like other countries, so I don't even know where we're going to retire. So having a UK bias didn't really make sense for us, because we're not biased to the UK really. We're not going to stay here. That is a likely possibility that we're not going to live here forever. So I did want something that was globally weighted and followed the actual market and its actual weighting. That is why we switched to the FTSE Global All Cap Index Fund accumulation, because I did want to keep accumulation. So I switched. Honestly, it was probably not the best time to switch it, because it was as the market had, I was waiting for our Lifestrategy 100 to recover, and then I could sell it off. However, I think I did the switch on a weekend that was a holiday. Never do that. Don't ever do that. Don't even do the switch on a weekend. It does take a few days anyways, but it took even longer because I'm pretty sure it was like a holiday weekend and the stock market was closed, and you cannot sell your funds and buy your funds and then the next day your funds appear, because there's no stock market to buy the funds from. It's closed. So that was a bad idea, but I Thankfully, we didn't make like a loss or anything, and our portfolio was up maybe 20% at the point when we did it. So yeah, it was fine, thankfully. But do try and do it maybe on like a Monday when the switch can happen during the week and you're not losing time in the market, which is the worst thing if something drastic happens, which you can't time. So try not to time it, but a Monday when there's no holiday is probably a good idea. So we made the switch to the FTSE Global All Cap Index Fund, and that is not a collection of funds. It's literally an index fund that follows the global market portfolio data. Let's have a look. The fund is made up of 6,858 stocks, and it's globally weighted. I'll actually read you what it says. The fund is a passive fund. The fund seeks to track the performance of the FTSE Global All Cap Index. The index is comprised of large, mid-sized and small company shares in developed and emerging markets around the world. Emerging markets are countries that are progressing towards becoming advanced, usually shown by some development in financial markets, the existence of some form of stock exchange and a regulatory body. So it's a global fund, it tracks the global market, and I feel more at ease moving to it. So whether or not I would do that again, like take my whole fund, sell it and then buy into a new one, it was something I battled with, and I decided because we were still at the beginning of our investing journey and I thought it was totally fine to do that. And it has been. We're up like 30% or something. So it's not an issue, but I don't know if I'll do that in the future. If we've been invested a long time, I might just leave it the way it is, because the difference in them right now is not that drastic except for the weighting. And it's been doing really well. At first I was a bit like, oh God, but then I realized time in the market. Time in the market is everything. Not timing, but time in. Time in the market is everything. So yeah, it's been doing well, and that is kind of what our main portfolio is gonna be made of going forward, and has been since I did the switch. So even though my perspectives have changed a little bit. I remember in the beginning I was just like, index funds only, I'm only gonna do index funds, I'm gonna keep it super simple. Then I realized that's not exciting. I'm young, I can take risk. Even though our main portfolio is gonna be in this global tracker index fund, which is what I want to talk about. The reason I want to talk about that is because I'm looking at how to diversify our portfolio a bit. Not in like adding bonds or anything right now, because as I said, we're still young, we still have time. Still have lots of time to be in the market, lots of time to ride out any bumps that happen, but just changing with your mindset. I kept feeling like I didn't want to move from the old mindset of being index fund only, ETFs only, you know, and advancing with my knowledge. And I've kind of like struggled with it a lot. But now I'm just like, as long as my intention is to invest long term, I don't think there are a lot of mistakes that can be made as long as I do the right research and I believe in the companies I invest in. Going forward, I have made some changes, I've added new things, I'm doing a lot of different things and trying new things, which is crazy because I didn't think I'd be doing that 2 years ago. I would have scoffed at the idea of that 2 years ago, but I feel like it's important to really kind of assess everything that's in front of you and make the decision that's right for you. Also, another thing, and remember when I was doing my like life strategy updates, people all like, oh well, you don't show your numbers, why don't you show your numbers? I expected people to ask that, but then people are so demanding of it. And it's kind of the reason I started my Trading 212 and Freetrade portfolios, so I could share that with you guys, because those are my personal accounts that I'm investing in. But I don't know, I felt like my husband's not really on the internet like that, and he doesn't really like put himself out there like that. I don't know if he would particularly mind, but I just feel like there's some things that can be private. At some point, I will probably share a whole portfolio with you guys. If you're really interested, I'll just ask him and I'm sure you'll be fine with it. But just because it's like something that we both contribute to, I don't feel like it's right for me to like put that all out in the internet. So that's the only reason why I never really share those numbers. Even when it was still like quite new and everything, I just wanted to have some boundaries. I'm such an open person, I'm not gonna lie, I'm very open. I have a vlog channel, as you know. I'm an open person and I'm an open book, and I'm happy to share things with you, especially if it's gonna help you. So I'm happy to share my personal accounts with you and to share my progress with you guys. I just thought I would make this video, and it went on way longer than I thought. Let me know down below if there's a specific kind of video you would like to see. I'm happy to make that for you guys. Or if there's something you've asked me to make in the past that I have yet to film, I'd love to know down below, because I kind of like what is useful. I don't know what you guys want to know about, honestly, and I reached 1,000 subscribers this morning. Freaking exciting. Thank you so much for subscribing to my channel, for being a part of this journey, and I'm looking forward to sharing more of that with you in the future. But until then, bye.